Good afternoon. Today is Friday, October 28th, and this is the last Friday of the month of October. And the time right now in Singapore is 2:42 p.m. in the afternoon. And overnight, we have seen Wall Street actually continue extended its rally from last Friday. And the Dow Jones, as far as we can see on the 4 hours time frame, we can see market traded a high of 32,388. Now, this is just a stone throw away from the September high of 32,504, and we are just below this critical level. If the market managed to cross over by the end of this calendar month, which is Monday, okay, at the end of Monday, next Monday trading, then it will portend the possibility of an extended rally going into the midterm election. However, after the midterm election, I believe the election will be a hung election whereby no party will be happy with the result, and that could lead to some kind of even further division within the US political bodies, and that could have repercussion on equity markets. So we will have to watch this 32,504 on the Dow Jones. If it crosses over by the end of this month, it may extend higher. However, like I mentioned, once after the election is over, let's say for example November the 8th, the market could actually come crashing down. Okay, so do watch out for this. Of course, yesterday we have the release of the Q3 GDP numbers. This is an estimate, the first estimate. It was a lot better than market expected. The market was expecting 0.4 increase. It came out 0.6. And this is the first quarter in which it has a positive quarter for the whole of 2022. Remember, the last two quarters were all negative. So this is the first positive quarter, provided the revision that is going to come in the next 2 months does not change this picture too dramatically. Okay, so in spite of the positive GDP numbers, Dow Jones only managed a marginal high of 32,388 and closed on a weak note. Okay, so it did not go up very much. And of course, when we compare this to the other equity index, like the S&P 500 and the Nasdaq, we find that there is a bit of a divergence going on. Okay, now let's look at the S&P 500. S&P 500 did not manage a new high. The high traded was 3,886.15. That's on Wednesday. So yesterday there was no new high traded despite a very positive GDP number estimates, and this is setting the groundwork for maybe for further retracement. Okay, if the market can continue to go down and ideally trades into the 3,735 to 3,689, I think that will be a great level to pick up another buy position, because basically I do not believe, based on the performance on the Dow Jones, I think there's a little bit of fuel left for the market to attempt to break the week's high at 3,886. Okay, we have to watch. However, if we compare this level, the Wednesday high, to where it needs to cross over, which is a September high of 4,119.28, it's a bit of a distance. So it does not look like for the time being it will have enough time to take out the 4,119.28 before the end of this month. That means we will likely see the market, resuming its bigger trend, which is down. Okay, so over the Nasdaq, which is even a worse, even a not too bright picture, because Nasdaq, okay, high traded on Wednesday was 11,681, and it is very far away when we compare to the September high of 12,752. Okay, so market basically has a three-wave rally, top up at 11,681, and if the market accelerate to the downside and take out 10,440, of course the rebound is considered to be over. Okay, and by and large, you can see that the Nasdaq has been the weakest link so far. Okay, in terms of this rebound that we are seeing from last week. Okay, over in Hong Kong, we can see that continues to chart new low for the year. Currently, the Hang Seng is trading at 14,826, 827 now. This is an all-year low. This is the lowest it ever been for 2022. It does not look good, and it may actually extend lower. If the market goes all the way, if you look at the daily time frame, it's actually pointing to a very bearish outlook. If the market takes out this level of 13,319 at the end of this year, this market may see a massive waterfall collapse going into 2023. Okay, so the outlook for Hang Seng is actually quite bearish among all the equity index. So when we compare this to the Shanghai Composite Index, again this morning we see that the Shanghai Composite Index is trading at a 4-month low. The low is traded now is 2,916.15 levels, and it is looking likely to be gunning for the year low at 2,863.65. And if that's been the case, I think the market is looking for much lower levels. And this is the aftermath of the Communist Party, Chinese Communist Party 20th Congress, and the reaction has been bearish largely. Okay, so this is setting the stage for lower prices as far as Chinese stocks are concerned. Over in Japan, we can see that the Nikkei is holding the line. If we compare this to, let's say, to the hourly time frame, we can see that yes, the market has a 3-wave rebound, but it has yet to come to my ideal target at 28,000. So if the market takes out the 60 minutes immediate what we call support line, that means there's a possibility it may not even hit my target of 28,000 and start coming back down again. So again, a lot depends on what happens thereafter. Today we have the Bank of Japan again very much not doing anything on interest rate front, and they have actually going to launch a large, very large stimulus package amounting to 200 billion US dollars to compensate for the inflation. So it means they're going to borrow some more. It means they're going to print money to do that, or they will likely sell US Treasury to support this new stimulus package worth $200 billion. So this is a bazooka move, and if that been the case, it's definitely going to be negative, because if they have to borrow, they already the largest indebted countries in terms of based on their GDP. Okay, so I don't think Japan is in that position to borrow some more, okay, to support such a big stimulus package. Okay, so I think the market is not too happy about this latest announcement, and it should be we have to wait for more information as the day progresses, because up to now we have no confirmation, just a hint that they are going to do this. Okay, so we have to wait for the final statement coming out from the Ministry of Defense, Ministry of Finance from the Bank of Japan. Okay, so this is the situation. When we compare this to, let's say, the currencies, dollar yen has actually come back down. Yesterday we have a marginal low for the week at 145.10. The market now is doing a 3-wave rebound, but by and large we do see that from a high of near 152, okay, the market went down to 146, rebound to 149, come back to 145 half, and now the market has basically taken out the week's low. It is likely to drift lower to, ideally, in my opinion, 144. If the market can drift all the way to 144 to 143 half, that become a very attractive level to re-establish long position, because the overall fundamental did not change just because the Bank of Japan intervened in the currency markets. So now that plus the $200 billion stimulus package that is currently being considered by the Japanese government, that could cause the yen to weaken again. So if the market technically can come back down to 144, it is, to me, a buy. Okay. Over in sterling, we see that the market actually went up to a high yesterday of 1.1645 and then started to lose steam. So we can see technically there is a temporary weakness, because the market take out a 60 minutes time frame support line. It may actually drift all the way down to 1.14. If the market goes down to 1.14 to 1.35, I think this area is actually very ideal for going back long again, because if you look at the higher time frame, it does look like this rally that we are seeing, okay, from 1.03 half, okay, does not look complete. The larger picture points to a 1.2060 potential. Okay, so if the market does drift back, I think this is calling for a buy, and we have to watch where it stopped falling, and maybe can pick up one last push higher before everything unravels. In the long term, sterling does not look like a currency that you want to hold long term. In fact, we want to be selling, but because right now the market having a technical rebound, and of course the new prime minister could be enjoying a short period of honeymoon period in which people are speculators are more lenient, okay, and that could benefit the sterling in the short term. But by and large, I want to be selling rather than buying. Okay, so Over in, oh, where's my euro dollar? Okay, euro dollar was over here, and euro dollar looks like it has completed a three-wave rally. It has hit my target at 1.0085. Market went up to a high of 1.0094, and then now it's coming back down. Now, yesterday we know that the ECB has high interest rate by 75 basis point, which is what the market expected. Okay. However, the statement that came out after the rate hike by the ECB president, Christian Lagarde, say that they are going to print, okay, continue printing euros, okay, and that is giving the market a bit of a jitter, and that could also coincide with the fact that now he has completed a three-wave rally. Maybe this euro currency is like to come falling back down again, because the European Union right now has no other option left. They have painted themselves to the corner, and basically they have the only way to prop up the economy is to continue to print money. And when you print too much money, when you are heavily indebted, that is definitely a no-no, and is a bearish sentiment telling us this currency need to be sold. Okay, so eventually I think this market will come crashing back down and take out the year low at 0.75, 0.95, sorry. Okay, over in crude oil, we can see that crude oil prices has not gone up after taking a high last night at $89.79. It couldn't sustain. Now it's pulling back. So by and large, it has completed a three-wave rally. Like I said yesterday, if this market can only do three-wave and cannot go beyond $90, there is a danger of market coming back down. Okay, so I have to watch for the time being. We are very, very close to the November 1st. Now, remember a few weeks back, this OPEC Plus has actually agreed to cut production by 20 million barrels a day, and that will kick in on November the 1st. We are not that far from that. Next Tuesday will be the date in which they're going to cut production. So that being the case, I think the market should be supported, okay, unless something else happens. So by and large, I still want to keep on holding to my long position in crude oil. I want to see how far this thing can go, because there's a very good chance this is doing at least a three-wave rally. And if this is a three-wave rally, we are seeing crude oil prices back to above $100 per barrel. Okay, this is a possibility that we cannot ignore. So let's say if this is the case, back at the minimum, go back to $98.60. Okay, so at least that will be the target. Over in precious metal, gold has lost some ground. Over here, we can see on Wednesday, the high traded was $1,674.94. Very, very close to the $1,675. Okay, you can see this is a three-wave, and the market for the time being looks a little bit dangerous because it has taken out the lower end of this rising channel. It could mean something, it could mean nothing. Okay, because this channel is what I draw. So obviously, based on this channel alone, it does not look good. My ideal target is about for a move to 1,691. Okay, at least this is my target. If the market doesn't collapse from here and take out 1,637, then I think there is still the outside possibility it may have one more rally back to 1,691. Now, under the current condition, we have dollar right now doing a technical correction that should actually underpin the price of gold, allowing it to drift a bit higher. But overall, over the long term, the dollar story is not over, and dollar strength is going to come back up, and that will mean that precious metal will have a hard time rallying. Okay, so over in silver market, we're also seeing that the high traded on Wednesday was $19.78, and this three-wave rally has actually hit my target. My target originally was $19.75. It actually penetrated that by just over 3 cents, and now the market is pulling back. Technically, I'm neutral right now on silver, and I'm just hoping against hope that this gold prices can actually edge higher to 1,691 to hit my target. Okay, right now I'm still holding on to my very long, my 3 weeks old gold position, which is on the long side. Okay. Over in crypto, we can see that the traded high on midweek in Bitcoin at 21,000. Now it looks like for what yesterday there was no attempt to go higher. Market is pulling back right now. If the market can continue to go lower, maybe go down to between 20,000 to 19,000 830, 840 levels. I think this area may be good for taking up a long position going forward, because I do not believe that the technical rebound that we are seeing in cryptocurrencies is over. There's a possibility we may see an extended move higher. Okay, when we look at a 4 hours time frame, we can see that this move here has been a little bit impulsive, and I think there is always a possibility market go up to 21,500 levels. So this still remains my immediate target for this current rebound. Over in Ethereum, you can see Ethereum is even stronger, technically speaking, because the rally from 1,155 all the way to 1,595 is very impulsive, and right now the market is pulling back. Maybe it can go down to as low as $464.30 or 50 cents there about. If it can hold there, I think the market has the potential to go back up again, and this time there's every possibility it will take out 1,666, okay, 1,655, and maybe even challenge the 1,789. So this is actually a very bullish development as far as I'm concerned, and do watch out for Ethereum. I think this is where the driver is. All the movement that we see this week in terms of the market rebounding can be largely be attributed to this just one coin. Okay, Ethereum seems to be leading the move higher. For Ripple itself, you see the market is moving into a consolidation pattern. You can see that each high has been lower than the previous high, each low has been lower than the previous high. No, sorry, let me repeat again. The high has been lower than the previous high, and the low has been higher than the previous low. So basically, it's moving towards a consolidation. It could be end up as a triangle. If triangle, that means that this is A, B, C, D, and then maybe we can expect another pullback, okay, without taking out the 0.42 levels, and then after that there may be a very aggressive rally to the upside to take out 0.5583. Okay, so this will be the move that I will be anticipating, not to trade right now, and to see how this market unfolds. Ideally it goes higher and then pull back down, and the next pullback is where I think the opportunity lies. It all depends how far this thing goes. Okay, if it pulls back maybe 61.8%, I think that was where the opportunity to go long for a very aggressive rally. Okay, so that will be what I am anticipating. Over in Cardano, we can see the market has from a contract low of 33 cents gone up to 43 cents, and now it's pulling back. Now this pullback is in a three-wave pattern, and we can see that this is the bracket of price which I was hoping to see near the 38 cents, and the market came very, very close. So I think the market may have already bottomed and getting ready for another surge higher beyond 43 cents. Where I think it's going to go, hard to tell, because overhead there's a lot of resistance from 44 cents to the more obvious one, okay, at 48 cents. So for a time being, let's consider these two levels first. Okay, so I think there's going to be one more push higher. Okay, Solana also have quite an impressive move. Market from $26.84 rally all to $32.38 and pull back in a three-wave pullback, and it has hit my target. Okay, my target was for $38.17. Okay, so I think it has hit its target in a three-wave pullback, and it's probably getting ready for another rally from where it is currently. Currently it's trading at $30.55. There's every likelihood that it may even challenge the $35.35. So this is my immediate target. Binance Coin is not doing very much. Actually, when you look at the Binance Coin structure, it is very similar to what we see in the Ripple, in which the market is consolidating into a narrow and narrow range. And if this is A, this is B, this is C, this is A, B, C, D, then maybe there's one more pullback, and if the next pullback happens, then it's getting ready for a massive rally, which could be very similar in structure to the Ripple coin. So do watch out for this move here. So I will end my sharing for now, and I shall see you on Monday. And if you are registering for my Sunday webinar, do remember to register for my Sunday's webinar through Eventbrite. Do look out for it, and you need to register. Okay, guys, I'll see you again either on Sunday, if not Monday. Bye-bye, and have a great weekend ahead. Bye-bye.